Good morning, Jags. This is Fahad. Today is Tuesday, November 24th. Let's get started. The chart that's in front of you is crude oil. It's up another 1.2% in pre-market. All night long, crude oil has been generally trending higher slowly. And if you look closely, this is now at $43.60. And if you look at on the daily scale, the last time crude oil traded above or at $43.60, it was only for a brief moment in August. We're going to start to clear all of this resistance zone, which opens the door for crude oil all the way up to $50 per barrel. If you look at XOP, there has been so much money that JAG clients have made in so many oil stocks that we have been discussing and providing trade ideas and webinar nonstop in past 4 to 6 weeks. And if you look at XOP in pre-market, here we go again. XOP closed yesterday at 56.70 and it's higher another 5%. We're talking the entire shale sector over here. It's up another 5% in pre-market. It was up more than 8% yesterday and went out at the highs of the session. So it's now going to open above $59 per share. That is XOP. XOP since Biden won the elections on November 3rd is now up 42%. It is the best performing sector in the market. And a lot of JET clients have been positioned precisely to benefit from this trend over the past 3 to 4 weeks. We've issued trade ideas and webinars in several stocks, including PXT, including EOG, which was up sharply yesterday, including PBR, Petrobras. We discussed this one, buying January call options, including S&P, which was discussed in conversations by Chronicle a few weeks ago in Jaguar Media, including Halliburton, in which I discussed yesterday, and we had a fabulous breakout in Halliburton yesterday in the conversations. This was discussed, including PSX, Phillips 66, Power Candle yesterday, and this too is gapping higher by another 4% in pre-market. So there have been at least 5 to 6 ideas that have been recommended in the past couple of weeks, and all of these have been big money maker throughout this entire week. And it seems to me that they're going to make even more money this morning, with the entire sector looking to gap higher by more than 5% and crude oil moving higher. Now, I would like to point out one quick thing, which is that yesterday we pointed out in the chat room in Oil Exploration, XOP, that there was a buyer of December 4th weekly. 5,000 of these December 4 weekly 56.60 call spread was bought for $1.08. And this sector is going to open above $59 per share. So this call spread is now going for maximum gain potentially. And so it was bought at $1.08 yesterday, as we discussed in the chat room, and they're going to be easily up 150% or more this morning, with sector now actually pushing towards $60 per share in pre-market. So anybody that got into that position, you will make money on that one too. So fabulous, fabulous week of being long energy sector. Lots and lots of names working. Keep in mind, I might actually start to take a lot of profits or just trim positions going into the OPEC meeting, which is going to be next week on Monday, just because these stocks are running way too fast ahead of that OPEC production potential delay from January to April. And there's no reason to continue to be so one-sided with so many positions. So I'm going to probably start to trim and start to take profits a little bit going into the weekend. So that is XOP. Now I want to cover one stock real quick. If you go to the website, you may notice that on October 22nd, we presented a bull case in webinar on October 22nd, right over here, YNDX, YNDX. And in this case, we particularly mentioned that the stock has bottomed, as it has come down quite a bit from a high of $70 per share to a low point of $55, $56 per share. And at that point, we recommended buying January 60 call options for $4 or less. This is YNDX. If you look at the chart, YNDX is immediately, this was the bottom right over here, around $56 per share. We recommended buying those January calls, and immediately the stock has started to bounce back. And for the past couple of weeks or so, it has been consolidating in a tight range. Here is that bull case again from October 22nd in webinar. I bring this up because Bank of America is upgrading this stock today with a price target of $80 per share. And if you look at in pre-market, the stock is nicely ripping higher. It closed at 61.47 yesterday and is trading at $64 per share in pre-market. So stealth rally is taking place, and I think this thing is now going to break out from this tight consolidation and bull flag. And I think there's a setup here now for a move all the way up to $70 per share. If you simply draw the trend lines, you will see here is that give or take a few pennies. Here is the simple trend resistance in YNDX. If it starts to take out this $65 per share and the stock is already pushing towards that in pre-market, that opens the door all the way to new 52-week high, possibly $70 to $75 per share. So if you're holding, as per recommendation, if you're holding those call options, the January 60 call options, they should make pretty good amount of money today. They should actually double today. Now, a couple things that stand out for me in YNDX in this analyst note. They talk about 5 key reasons to own this stock for 2021. A very big bull case. They believe the stock could potentially travel all the way to $100 per share. But some of the key charts in this that really catch my attention is, number one, how this company continues to become a leader by taking market share away from Android. That's Google's Android in Russia. And number two, how the penetration in Russia remains so low for the e-commerce penetration. So there's a significant potential to still continue to grow. So here's one chart that really catches attention. You can see that the inflection point between YNDX and Google came really in mid-2018. That's when we started to see Google start to lose its leadership position, and YNDX continue to see its market share gains throughout in the search category. And as a result, it has further accelerated during this pandemic in the past 8 to 9 months. And now it's estimated that its market share position, which is now already for the search fields, already nearing 60%, will potentially get into low to mid 60% in the coming years. And here's another chart. Now combine this view. So you have a company that has more than 60% of online searches are going through that, which is YNDX, and yet the penetration for e-commerce sales in Russia right now is about 9.3%. There is significant amount of potential still to be had in this company, because by 2022 or 2023, we could see another 50% or 100% increase in the e-commerce penetration in Russia. Another point, another way of looking at it, Russia currently has, with a 9.3% e-commerce penetration, compare that to United States at 19%, China at 35%, and even an emerging market near Poland, for example, at 12%. And if you look across all of the European countries, you'll find out that for almost all countries, it's somewhere in the mid-teens to high-teens percentage of e-commerce penetration. Yet Russia is only at 9.3%. This is basically a setup for accelerating growth rate for YNDX. So I'll just stop over here, but those are the high levels of this upgrade note from Bank of America. Nice setup. Look for a breakout to 65, and I expect this thing to get to $70 to $75 per share in short term. That's it from me. Jay?
Morning, everyone. So first off, I will have a update on the home page either later today or early tomorrow on Pulmonx, ticker LUNG. Recently wrote about this on November 4th. This is the medtech company that treats severe emphysema patients. Since that time, the company has reported earnings and they have presented at the Stifel Healthcare Conference. So I will provide an update on that name.
Awesome.
And then the other stock that I want to highlight is Activision Blizzard, ticker ATVI. Now, if we look at the chart, shares have definitely underperformed since the beginning of August. Shares have gone from 87 down to 75. On November 13th, the company, as it always does every year, it released their latest Call of Duty game. This time it was Black Ops Cold War, developed by Treyarch Studios. And one thing that kind of catches my attention right away is normally Activision within that first weekend, or at least the first few days, will issue a press release just letting everyone know of the sales numbers that have happened. Now I have yet to see that. And I know KeyBank in a note, they kind of hinted at the same thing. Now there was an article, or there was a report out from the UK where they took a look at the data over there and noticed that digital sales were up 39%, while physical copies of the game were down 64%. So when you combine that, it was down 16% year over year when compared to last year's Modern Warfare release. KeyBank in a note late Friday said extrapolating this to global results may be a stretch, but it would imply opening weekend sales of 505 million versus last year's 600 million. Now, look, we still might get some sort of data release from the company, but a couple things that I've noticed with this newest release is that when I look at the community, the reviews from the community, one thing that I've seen is some crashes with the game, both on new consoles such as PlayStation 5 to the PC to Xbox. Treyarch Studios has even released 2 patches that have tried to fix these stability issues. Now, I think I would say another big component though is Warzone. Modern Warfare released this free-to-play battle royale mode last year, and it was a big hit. Obviously, as I said, it's free to play. And one thing you're seeing with Black Ops Cold War is that their integration with Warzone is not yet available yet. It's actually going to be available on December 10th when Season 1 drops. And I think what people are hoping for is when this integration happens, you're then going to get a spike in your microtransactions, for example, your character skins, your weapon camos, etc. So yeah, it hasn't been, I'd say it's been a rocky start for this newest release, but we'll see what happens when Season 1 drops on December 10th.
Just my high level, excuse me, just my high level thoughts over here in Activision. Previously back in 2018, 2019, and some other times during this year when we have covered Activision too, it's more and more basically we have focused on microtransaction as the key driver of growth, the very thing that you just mentioned.
Mm-hmm.
And with the digitization of game, with people don't buy discs anymore, they simply download maps and such, and then they do these microtransactions for $1 to $2 to buy whatever gear they want for their hero and this and that, depending on the game. That was meant to drive tons and tons of revenues for the company, but it has been very slow in terms of stock performance. It hasn't really translated into robust stock performance. I mean, from even 2 years ago when we were looking at this stock and it was trading at 60 to 65 dollars per share, it has been very slow in the making in boosting the valuation as well as boosting sales for this company. And then to my also surprise, remember that Call of Duty Mobile was first time launched late last year in December.
Mm-hmm.
And immediately we saw within a month or so, we saw 100 million downloads on cell phones around the world. And then the launch happened after that in Europe, and then first US, then Europe, then China, then Latin America and everywhere. That was another major launch too. But yes, sure, the stock benefited from pandemic, but that too didn't really translate into robust performance for the stock price. As well as financial. Do you have any high-level view as to what has kept these game publisher, Activision, Electronic Arts, and Take-Two from just taking off?
Well, I mean, with Activision, if you look beyond Call of Duty, they're obviously I know Diablo was another game that they had to sort of push back. And they haven't had, I don't feel like they've had a huge game that they could sort of depend on. Call of Duty has always been it. That's been their
Yeah.
mainstay. I know with Electronic Arts, if we switch to that, I remember they did see a nice boost when Apex Legends came out way back when. And then Take-Two Interactive is a little bit different because their franchises, Grand Theft Auto, we've talked about, they haven't released a new Grand Theft Auto game in many years. And then Red Dead Redemption 2 came out, and I know that didn't get off to a great start. I know the reviews and I think the community was disappointed with that. So I just don't think we've seen a very popular game sort of
Yeah.
explode.
Yeah. And maybe this will change after the new Xbox and PS5 comes out, right? I think
Sure.
they're hitting the shelves now, right? I mean, this is Thanksgiving week. They're already out.
Yeah.
So maybe this
Difficult
will
to get,
change.
but
Yeah, but I've just been this for the especially in the past 3 to 4 months, the lackluster performance from the entire group has been rather surprising. You've got the pandemic advantage working in your favor. You've got these microtransaction that has provided great source of new revenues, high margin business. You've got the plenty of refreshes of existing lineups like Call of Duty as we talked about, and yet it just hasn't been enough, to really perform for these stocks for quite some time. I feel like it. Anyways, we'll keep an eye on this one. Thanks for the update. And technically, I have to say that all three of them maybe are probably gonna run up to this resistance. All three of them have the same exact looking type of charts. Take-Two Interactive looks a little bit better. See if there is the shift in sentiment coming for the entire group, and they will start to break out soon. All right, good stuff. Chronicle.
Morning. I have quick updates on a couple stocks, and then I'll get to my bullish view on not a company, but an ETF. So the first stock is Qurate Retail, symbol QRTEA, for which I laid out the bullish trade idea for on October 12th. And then I also provided a post-earnings update on November 6th. So this has worked out nicely. It's up about 45% since October 12th, and I believe my target at the time was for a gap fill from the payout of the special one-time dividend. And it's already filled that gap. So now the question is, where do we go from here? Personally, I've taken profits. I'm out. Like if we look at the latest checks on consumer credit and debit card spending from KeyBank, we can see that QVC and Zulily have seen a bit of deceleration in recent weeks, while at the same time, the stock has rocketed 40%, and the daily RSI is already well above 70. So if anyone's in the trade, I think it's prudent to either take profits or at the very least look to trim, because I think we're going to see a pullback before the next buying opportunity. So that's my first item.
Excellent. Yeah, this has been a phenomenal run to my surprise too. I did take a position into this one, by the way, so thank you, Chronicle. It has been a huge, huge solid run. Once it starts to clear $8 resistance from here on a very, very heavy volume, as you guys all know, I pay a lot of attention to volume and resistances, and so I love those kind of breakouts. This thing just went on an absolute tear. So thanks for the update. And once again to everybody, here is the view from October 12th when this bullish case was presented for QRTEA in the Jaguar Media morning conversations. Next one, you also have another big winner here right now that I did not take a position, which I had my reservations about this, which is Gamestop. This thing is also powering higher sharply.
Yeah, so I presented the trade idea for this one on November 12th, and I think it still has legs. Ultimately, the bull case here is simple. It's not so much to do with fundamentals. We all know this isn't a good company. This is more to do with short interest and the fact that, number one, we're in a regime with a lot of excess money supply and a lot of quote unquote new age retail traders who love these sort of troubled companies. The fact that GME is up, yet ATVI and EA are suppressed, is testament to the sort of weird market we are in. Number two, there's a massive short interest on GameStop right now. I mean, the short volume is at $730 million, while the market cap is like 900 million. This is insane. Like all these participants who are short, they think they're being clever and contrarian by shorting the company when in fact they are the crowd. Meanwhile, the company actually has a solid balance sheet, and so there's no bankruptcy risk here. And because of the new consoles, 2021 is probably going to be better than 2020 or 2019 for that matter. And if the stock is not going down on bad news, then that means the short sellers are lacking a catalyst right now, and so they're just trapped. So whenever there's good news, this will squeeze. And when we have broadly bullish days like yesterday, where value vastly outperforms tech, this is also going to squeeze. So it's sort of like win-win. But make no mistake, this is a bad company, and so even though I'm long, I'm making sure that I don't get sucked into the bullish narratives that all the other people who are long are peddling. I'm just here for the short squeeze and nothing more. So
102 million shares outstanding, almost 67 million shares sold short. So there you go. What is 67%, something crazy like that, short interest? Yeah, that's going to squeeze it on the days, especially when you get the growth to value rotation, which has been a key theme really since September that we continue to push into. Now you have a retail pick here. Is it a retail pick or is it ETF? What is the ETF?
It's an ETF. So this is the last item for the day. So over the past several weeks, we've been pushing industrials, energy, and construction. And then over the weekend, Fahad, you talked about emerging markets and why we should be long EM going into 2021. Now, one related theme to both industrials and EM is rare earth metals. But if we're only concentrating on US equities, there aren't a lot of single stocks that we can look at. And so instead, I'm looking at the rare earth metals ETF, symbol REMX. So rare earth metals did get a lot of attention throughout the US-China trade war. And that's because they have plenty of applications when it comes to industrial production. They're used to make everything from glass, microchips, chemical catalysts, even cars and planes. I think I shared an image. Yep, that one. So this is partially a play on Buy America, Build America, but this is also a play on EM and Buy China, Build China, because if we look at the country that is most responsible for the supply of rare earths, it's China by a mile, which is why Chinese companies dominate the weighting of this ETF. So if you don't have access to Asian exchanges, then this is a decent way to get some exposure to rare earth metals. We've spent a lot of time recently talking about XLI, XME, XOP, and Russell 2000. I think we can add REMX to the list. It's the volume on this ETF is okay, like it's not illiquid unless we're talking about a massive account, and it also tracks the NAV pretty well. Looking at the chart, it's getting a bit overbought, but I think it's a buy on pullbacks.
The two stocks that are components of this, of the top 10 components of the ETF, REMX. One of them, actually, one of my clients have been asking me about this, so now this is giving me a good reason to research this. One is Lithium Americas, LAC. That's one of the top components of this ETF that we were just discussing, REMX. And then the other one is Livent, LTHM. LTHM has been a powerful chart as it has been a key beneficiary of the rising flows into the electric vehicle market, and we have seen those sparks everywhere. And then the other one would be LAC, Lithium Americas, another one that perhaps we need to come back and revisit, especially if the flows will continue into the sector to be positive. So good stuff. This has also been a big battle between the US and China as to who controls the rare earth market. There's a fantastic video. I'll share this in the chat room later today, but there's a fantastic video that was also put out by I believe it was by Justine Underhill of Real Vision about a year and a half ago about rare earth metals and who controls the market. And I think it's probably worth watching. So I'll look up for that too and share the link in the chat room today. All right, great stuff. Thank you, gentlemen, for joining. And Jax, we'll see you in the chat room shortly.